Hey guys, how's it going? So I'm making this video as of 3:11 a.m. in the morning. For some reason I couldn't sleep, so I decided to get up and make a video in the middle of the night. But as soon as I made the video, I'm feeling extremely tired and I'm about to pass out. But in this video we're gonna be talking about Afria's upcoming earnings report, and I think it's going to be, it could be actually kind of bad, but that's just my opinion, and I will explain in this video. But let's just take into account, they did retire $127.5 million of debt by issuing 18.7 million common shares at approximately, okay, you know what? I'm so tired right now, it's hard to concentrate, but okay. Anyways, 25% discount, so it's $4.84 USD per share. So it's good, but it did dilute shareholders by 18.7 million. I also would appreciate a thumbs up for this video if you enjoyed it. If you don't, then I can always accept a thumbs down. Anyways, they also issued 1.658 million shares to Emblem for breaking their agreement. So that is quite a bit of money. Something I want to point out, this lawsuit has been in works for like months and months, and they finally decided to settle with a 1.658 million common shares. A similar thing could happen with Cineworld and Cineplex. If Cineplex wins the lawsuit against Cineworld, something I wanted to point out, this could be a really big beneficial to Cineplex, and the stock could skyrocket. I'm just saying. Anyways, let's move forward. So aphria is trading at $6.93 right now. It is currently valued more than Aurora. It's valued at 1.994. Aurora is valued at, let's see, $1.83 billion. So aphria is valued more than Aurora. They kind of trade places back and forth, but right now the market is valuing aphria more than Aurora, so that's a good thing. If you're bull on aphria, awesome. But the one thing I'm a little concerned about is like they usually announce earnings around this time. They would announce the earnings report around this time, but it is the Q4, I believe. So it could be the reason why it's a little delayed. Q4s are usually delayed because they have to put everything all together. So that could be a reason why they haven't announced an earnings report yet. But I'm still a little concerned because, the stock is up, and if the earnings are bad, the stock can easily pull back and drop. So, if you're a shareholder, that is one risk that you must, especially if you're a long-term investor, that is the one risk that you must willing to take. If aphria does report poor earnings report, the stock could drop. So let's look at the current earnings report that was issued on April 14th, 2020. This was for ending February 29th, 2020. They had about $515 million of cash. And if you look at the debt, they actually have quite a bit of debt. They have almost $500 million of debt, $130 million of long-term debt, and $334 million of convertible debt. But they just retired $140 something million, I believe. $127 million of debt. So the debt has been reduced for next earnings report by a decent chunk. So, the $500 million of debt is more like, less than $400 million of debt, which is good. Cash positions, 512. So they're still in a strong cash position, and like it all depends on how much cash they burn in the quarter too. So their cash could be reduced. I don't know. We'll see what happens. Will they become profitable? I hope so, but they were profitable this quarter. This quarter, they generated $64 million from MJ products. After excise taxes, their gross profit came out to be $35 million. Their expenses was less than $35 million, which led to gross profit before fair adjustment value. Okay, so $35 million. So if we take into account, this is $27 million for general and administration, marketing and promotion, another $4 million, which would be about 32. Selling would be 5. Research and development 700. They actually lost money. They should have lost some money, but they reported an operational income of 8.7 million, probably because of the because of the MJ products they added on, the inventory they added on, which gave them a profit. But in theory, they should have lost some money, though, in theory, because their expenses was more than their gross profit before fair value adjustments. So in theory, they actually lost money that quarter. Aphria wasn't profitable that quarter, looking at the financial sheets right now. So unless I'm wrong, comment down below. Let me know. If you think Aphria was profitable, let me know in the comments below. But according to if you take the gross profit before fair value adjustment, and you just add up all the big expenses besides the share-based compensation, so that adds up to almost more than 35 million, like almost $40 million. So in theory, they should have lost $5 million that quarter, but it came out to be a profit because of the MJ products they grew. So no, that's good. We'll see what next earnings report comes out. But next one, I am a little worried because what happened near the end of February, the start of March, Aurora launched the Daily Special. The Daily Special is going to put some serious pressure on Aphria's products because it brought down the pricing of MJ products in a dramatic way, and I think that there's a possibility that the Daily Special could have taken a significant amount of market share from Aphria in the month of March, April, May, which is the next earnings report. And then vape pens also is going to be a problem too, because I know Aphria launched a lot of vape pens near the end of February to make their earnings look good. And vape pens, there's so much competition in vape pens, and Aphria already sold a significant amount of vape pens in the February, in that last earnings report. And again, this is pure speculation on my part, and none of this is actually material, so don't take this with a grain of salt. But I'm thinking that vape pens are, because I just take myself into account and people I know into account. A lot of people I know that do MJ, they've been switching from dry bud to oils and vape pens and edibles, and they are no longer doing dry buds anymore because it stinks and they have to go outside, and so dry bud sales are probably down quite dramatically in my opinion. But again, that's my opinion, and I also think this is going to affect their Broken Coast products. Broken Coast is my favorite brand in the MJ space. It's my favorite dry bud brand. I love Broken Coast, especially some of the strains. I think Broken Coast has excellent product, and it also has an excellent branding. But I think that Broken Coast is going to have a lot of pressure because of the price compression, and they are charging premium pricing. And a lot of people are more interested in vape pens than dry buds right now, in my opinion. and edibles. So I think dry bud sales have gone down quite dramatically, and with the added pressure of Daily Special and the Hexo products and other companies coming up with their own value brand, Broken Coast is, I think is going to have a hard time selling their product. Again, that's my opinion. We'll see if that's going to be the scenario. I'm making this video just to let you know that the exact opposite could happen. I could be 100% wrong. Aphria could continue to keep running up and make you guys a lot of money. But you also gotta remember that if Aphria fails, the stock could drop quite dramatically and all that profit gains could be wiped out completely. So you're gambling with earnings. We'll see what happens. They should have earnings sometime in August because they haven't fully announced the earnings yet. And usually when they do announce, they would give about a week's time notice of when they will report it. So we'll see what happens. But, I think, in my opinion, I think their revenue for MJ products is going to be reduced from I believe this is 64 million to roughly 54 million. I don't think it's going to be as high as 64 million because if you remember Organigram, they came out and said that they're having problems, and I think if Organigram is having problems, and Hexo is taking a lot of market share, Hexo and Aurora and a bunch of other smaller players are taking a lot of market share from Aphria in the dry bud area because of their value brands. And Aphria right now doesn't have a value brand. They're probably going to come out with a value brand eventually, but that's going to hurt their margins and that's going to hurt their revenues. So we'll see what happens, but kind of scary. Right now we're sitting, the Canadian market just doesn't impress me. Yes, there's more stores. There's more stores in Ontario. There's more stores in Alberta, in BC, in the rest of Canada, but there's also huge price compression happening right now in Canada because of the sheer amount of competition. We got Canopy, we got Aphria, we got all these smaller players. We got Hexo with a value brand. Organigram. Just so, like 100 different players. Or more, 100 or more different players in the MJ space. So I just think that, and then if we look at Valens Grow Works, not too long ago, they announced, lower revenue with lower gross profit, and they were manufacturing more products. So they are suffering from price compressions. Organigram is suffering. Organigram just came out and said that they're going to suffer in their earnings report. And then Aphria, I think they're going to suffer too on the earnings report. We'll see if that's going to be the scenario. But I hope I'm wrong. I hope this stock keeps going up. I'm not a shareholder, but I hope so. I hope you guys all make a lot of money, all the Aphria long-term shareholders, So anyways, thanks for watching, guys. I hope you enjoyed my video. Subscribe for future updates and have a great day. Bye.